What happened? It was just the top edge of the S&P at 77.5, guys, to the tick. Yeah, literally to the tick. There it was. The institutional decibel meter gives us a reading, and it gets us into a sell trade at 76. And within a few minutes, 14 minutes later, you've just made $500, guys. Selling for $9.99. Nessie's selling it for $5.99, but it doesn't come with a warranty on Nessie's one. Kim's got a warranty, and she signs a postcard. So she gives you her signature. You get a framed picture of her to put on your wall, and all for $9.99. Nessie doesn't do that. She just gives you the indicator. No warranty, no instruction manual. It's far better deal. Pay the $9.99, guys, and it's yours. You know what I mean? Is that not one of the best indicators you've ever seen? I mean, it might sound as if I'm being flippant about it. It might sound as if I'm actually joking about it. But is this actually not true? Is this not one of the best indicators you've ever seen? That when we get these decibel readings of commercial activity, that you almost always reverse the marketplace. What do you think? Look at them. Still nobody thinks it is. Theo does now. A reversal, a reversal, a reversal, a reversal, a reversal. A buy, a buy, a sell, a sell, a sell. Thousands of dollars in profit. Thousands. Since nobody wants it, I won't bother telling anybody what it is then. Paul already knows the secret to it, so does Theo, so we won't bother telling anybody what it is since you don't want it. Fair enough, Kimmy. They don't want it, so there's no point in spending any time going through it. Aye, too late! The offer's been withdrawn, Justin. It's went up to $14.99, and now you don't get a picture of Kim.
The bids are flying in now. We're up to 15. 15.25. Oh, Murray's stepping by all of you. He's up to 1,000.
Yeah, it's not that good, Murray.
Yeah, Stuart's like, you got it.
Where was the last aggregation on oil that we saw here this at the late morning? Does everybody see the oil aggregation? Take a look. Does everybody see that we go above the decibel reading here on oil? So we're obviously looking at a possible reversal area there on oil. Commercial reversal, let's take a look. Commercial reversal, 1323, rallied to 1380s. Another $600 profit on that commercial aggregation level. Boom. It's crazy, isn't it? Absolutely crazy. And the takeaway, look, we don't get any more real commercial poppers on this trade all the way through that process. None. Since we're up to $15, we might as well tell you guys. Guess what it is? All it is, guys, is volume. That's it. An indicator that you've got free on your charts, it's volume. And all we've done with the volume is we've taken a Z-score. A Z-score of the volume. What is a Z-score? A Z-score is the standard distributions of volumes. Standard distributions of volumes, right? The standard distribution of volumes is why we get rid of all the noise here. Because obviously all the noise comes from all the volumes, right? Now, you don't have to do this because there are hundreds of indicators on TradingView that give spike volumes, right? You've got NVol, you've got HVol. We had Sammy showed you the HVol indicator. We brought in the NVol indicator. They're exactly the same indicator. They use a process pretty close to the same process as this. But what's useful about this, Stuart? What's useful about this process, Murray? Because you do the process, what happens? You learn the process, you learn why it's important, right? You start to learn why these areas are important on your trading charts. And because you're learning why they're important on your trading charts, you start to see the relevance of these ideas. If we look at the state of the situation in the background, you can see that there are no other big aggregations. Well, there was a big spike in an aggregation here. What happened next? You can see that there was a very big spike there into a new low price. That is aggregation, guys. So there's a bottom edge puts in. Now, is it the bottom edge or is it just a bottom edge? It doesn't matter. It's still a bottom edge. It's still going to offer you the opportunity to maybe scalp some money off of this level, and it might be the bottom edge. It might be the bottom edge. It might just be the start of a bottom edge. It might be the end of a bottom edge, but it is a bottom edge for the time being at least. And if you wanted to buy it, it gives you a great starting point to start building your structures from. We've now got a structural buyer here. Aggregation sounds like a big long word, sounds like a big complicated advanced word, but all it means is there are lots of traders doing the buying. Well, it's not necessarily lots of traders, it's more likely to be a big trader coming in and starting to buy into it. Because think about it, guys. Have you got the volume to create a move of 8 standard deviations in terms of the total average volumes? Have you got enough volume to move the volume meter 8 standard deviations? Nobody does, right? Except for the big banks. Now, you might be able to do it on a 1 second candle by putting in a 10 lot when the average volume's been a single contract. Then, of course, your 10 standard deviations against the average, but that's obviously a very, very extreme exception and not the norm. But when we're looking at an aggregation, one of the things that we start to recognize is retail can't create that size. Retail can't create 4 standard deviations or 5 or 6 or 10 standard deviations. The only people that can do that are big bank commercials. So what does that mean? That means when we see these aggregations taking place, now that's a little bit light. When we see these aggregations taking place at extremes, and obviously on oil the 6 is marked off as an extreme, the only people that can do that are the banks. There it is. This is a bank activity meter. A bank activity meter on your own charts, guys, live. Inside information that you've always wanted. Does it work on other things? Well, it works on anything. It just shows activity, right? What about the 6E contract? What about the 6E? The Euro futures. Does it work on the Euro futures, guys? Well, yes, it does. There it is. There it is. You see all the spikes in bank activity? You see it all? Now, we're on a 15-second chart here, but we could obviously take it out of a 15-second and we can move it up to, say, a 1-minute chart or a 5-minute chart or a 10-minute chart, 15-minute chart, or whatever chart you want. But do you start to see the bank activity on these charts? Do you start to recognize where the banks are getting active? So there's all the big activity levels there. So there's all the bank activity levels there on the euro. We can see them. There they are there. There's a big bank activity level there. We can see that there's a lot of activities in here at, guess when? 8 o'clock on the dot. There's a lot of activity here. There's a lot of activity here. There's a lot of activity here. And obviously there's a lot of activity as we come into the PCE numbers here. So there's all your key bank activity levels. What is a key bank activity level? It's an RGL, right? So these are all RGL levels on the euro that you can actually start thinking about as traders. Now, if they're into extremes, that's good news. It's possibly the start of an end trade, the start of the end. It might not be the end, but it's the start of the end. It might be the end. If it's coming off a bottom edge and it's a buy coming off a bottom edge, it's still the start of an end. So we start using our context and our structure to try and figure this out. So if I then look at the structure, was that big activity level, was that an opportunity maybe to start selling some euros? Yes or no? Was that big activity an opportunity to sell some euros? Well, yes, because the euro then collapsed in price. What about this big reversal here? Not sure what that is, because obviously it looks as if somebody bought it at that stage, but then there's another one here and then there's another one here. So obviously in the overnight session coming into London, there was a couple of attempts here. Now, what that could be is what? Well, we wanted to be selling the euro, right? So if we wanted to be selling the euro, what is this? Probably the seller that sold here, that's probably the seller taking profits, right? So what about this one here? Well, there's another aggregation. Another aggregation because it's on a downtick. And what happened? The price went up. Did it stop the price? No. Did you make money on it? Yes, you did. This one's not into an extreme. So obviously what this one is probably what? Well, we can see it's probably buyers. What is this one? Sellers coming in off that high price. So there's your aggregation levels right now. There's your aggregation, yeah? That's it. So there's your aggregation levels on your charts right there. It's pretty crazily good, isn't it, when you think about it? It really is that good. When we then drill it down into, say, something like a 1 minute chart, we can actually see those aggregation levels a lot clearer. There's the aggregation on that candle there, so you can see it exhausts a little bit through the level, so that aggregation allows you to start thinking about the possibility of doing what? Buying into that bottom edge now. It starts to give you the possibility of buying into that bottom edge 2 minutes before the bottom edge actually happens. This one is obviously that candle there, but it seems to be coming from the top edge on a bigger time frame, so it's difficult to make a read on that. But obviously, because it does give you an aggregation there, you could have been buying into that buying into that close as well, and obviously that gives you that very nice buy side reversal. But that big sell on a bigger time frame is obviously very, very strong, and that gives you some nice aggregation levels. Look at what happens here into that candle low. There's another possible buy trade, and that's where we're at just now. That's exactly where we're at just now in this, right? Does it work on the NASDAQ? Sure, of course it works on the NASDAQ. You can see it working on the NASDAQ as well, can't you? Does everybody see the aggregation on the NASDAQ? The NASDAQ actually is one of the better markets. Why? Why? Well, because the volume is more kind of, it's not as consistent. The S&P's got quite consistent volumes right through every price point. So when we see these aggregation spikes in business activity and bank activity around about 7 standard deviations, which it always is about 6 or 7, some of the markets is a little bit lower. But when you see these kind of activities spiking as crazy as it does here, you can see these are the 2 biggest aggregations we've seen today on the NASDAQ, and we can obviously interrogate the charts to see what happened in those 2 locations. Isn't that a phenomenal trade opportunity, guys? You were paying $12.50 for this. Look at that NASDAQ sell. And look at that NASDAQ sell. Is that not nuts? Is that not worth $12.50? Selling the NASDAQ at $370 and trading a low price of $290, guys. That's 80 points on the NASDAQ. 80 points is $1,600 profit on that aggregation spike, guys. $1,600 profit on that sell. Is that not worth your $12, $15, whatever you paid for it? I mean, seriously, guys, come on. It's unbelievable. Now, what I've done, obviously, is I've traded the Z-score out to a very, very, very long setting. Why? Because I don't want to see individual spikes. I want to see big spikes. So the setting we have on Z-score is like 70. The setting, well, it's good because if the first one breaks, Paul, you can always use the second one, right? It's always good to have a backup. So the setting we have on the Z-score, and this is 70. Why did we use 70? Because it's a random number. Well, yeah, because it just takes away all the noise. It takes away all the noise, and therefore the only times it ever shows a big commercial activity is those odd occasions. We don't want to see an odd occasion every few seconds. We want to see an odd occasion at the tops and the bottoms of swings. And the two trades that this is given, go backwards and you'll see it's only two trades. Look, two trades, two trades, two trades, two trades. There's only been two trades. The two trades that it's given, it's managed to swing for a huge profit of $1,600 on the first sell, and then on the second sell into the PCE numbers, you can see obviously it went for what, 40 points, another $800, another $800, guys. That's $2,600 you made on the NASDAQ using the only two signals you got on a 1 minute chart. People think trading's difficult, right? So when you think about this, it seems to make perfect sense. Now, can you see it on a lower chart than a 1 minute chart? Well, of course you can. Let's look at the current situation on a 15-second chart into these areas here. Is there anything that's really high? Not really. Not really. There's nothing really high enough. There was obviously an aggregation there. What happened? It was on a closing candle there. And then there's a little bit of possible aggregation here, but it's not reversed the market yet. So it's not high enough. I mean, it's only down at 3. I mean, that's about average. We really need to have it seeing somewhere. Remember, the other aggregations that we saw in the other chart was about 6s and 7s and 8s. This is only 3. It's not really commercial activity. It's just increasing activity. So that's why we want to see it. What is a big aggregation level? 6s. 6s. That's a big aggregation level. 6s. That's a big aggregation level. And that's what we've got to try and see. That's what we've got to try and see is these big commercial key areas where the big commercials are taking advantage and trading. Dead easy stuff, isn't it, guys?